Hey everyone, how's it going? It's Thomas back at you with another video, and today we will be covering another company's IPO. This company is F45 Training. Here I have pulled up their S1 filing, so we'll be looking through it. I'm going to point out the things that I've pointed out in previous videos, things such as cash flow and who the underwriters are, those things that I think are of importance to you guys. Point out some things that I found interesting in this, and then also give a little bit of feedback on what I think I'll be doing going forward with this. And yeah, we'll just go ahead and jump right into it. So for those of you that don't know, F45, they are a training based company. They're a gym based company, and essentially they're very similar to Orange Theory. And if you don't know who Orange Theory is, essentially what they do is they kind of do this group session training is kind of what they do. They do various activities on a daily basis. They mix it up, and I guess somehow that gives very beneficial results. I'm not the expert there. And so if you use F45 or Orange Theory, let me know. But essentially, that's what they are. They're a group-based gym sort of deal. And I was just wanting to see what this would cost you just running numbers. So Orange Theory to do unlimited classes is $160 per month. And then F45 is about $200 per month. So not cheap, but I suppose from a gym standpoint, if you are doing it almost every day and you're getting some really good results from it, it might be worth it. If either, if you use either of these, let me know. I'm all ears to hear exactly what it is that their results are. But for the main purpose of this video, so going through this S1, there was 272 pages here, and I tried to find the most important aspects of it for you guys. So they are listed on Robinhood, and they're set to go public tomorrow on the 15th. Their current listing price on Robinhood is ranged between $15 to $17. We'll know exactly tomorrow. Here on their S1, they are proposing a maximum price of $17, which is relatively low, I think, for a starting company. But at the same time, there's not a lot of gym-based stocks out there. And I've said this before, I think it's great when a new demographic of people get involved in investing. I want everybody to invest. And, there's not a lot of fitness-based stocks. I don't know what percentage of workout enthusiasts and gym members are investors, but there's not a lot of big name ones out there as far as I've seen. The really big one is Planet Fitness. And so outside of that, Peloton also has a stock. I don't know if Orange Theory does, but this will be a new one in the field. So it could be great for drawing in new crowds, especially for people who are very interested in this. One of their biggest fans, one of the biggest fans of F45 is Mark Wahlberg. Kind of a surprise there. I mean, I like him as an actor. I don't know how he is as a gym buddy, but they have the support. So, hopefully we can get a whole new demographic of investors in there. But they're starting off at allegedly $17 per share at most. And so let's go ahead and look at the cash flow. That's really one of the biggest things for me as far as choosing an investment. And so as you can see, they've had negative returns over the last 3 years, which is unfortunate. Now, the thing to keep in mind here is COVID plays a really big effect in cash flow. As far as the last 2 years have gone, at least, it's been, unfortunate for a lot of companies. I'm not expecting to see positive cash flow from a lot of companies in the year 2020. It's just probably not going to happen. It was just not a great year. And obviously in 2019, it was kind of towards that end, there was a little bit bumpy too. So that explains possibly these lower numbers here, especially the loss of 25 million. But this year they're showing a loss of 36 million, close to 37, and that is very concerning to me. Now, obviously, they are gym based, so it costs a lot of money to operate such facilities with having to provide all the equipment, having to provide all the utilities. It's going to be costly. However, this is a substantial loss, in my opinion. And, you know, if you're charging $200 per month, to me, it's a little bit of a red flag that we're looking at such a high loss. That is a concern to me. Now, the fact is they are getting their IPO. That will change a lot of stuff. They are estimating about $1 billion, which is substantial. $36 million compared to $1 billion. No problem. That's long forgotten at that point. But nonetheless, we're still looking at losses here. So that is a bit of a concern to me. But on a more positive note here, to look at their underwriters, we have Goldman Sachs, JP Morgan, Robert Baird, Cohen and Company, Guggenheim, Macquarie, and Roth. All substantial underwriters. These are solid backings. And, you know, this is just my personal take, but I will be looking to get into mutual funds and index funds with Goldman Sachs and JP Morgan. They are really big as far as being underwriters for startups. Well, for starting IPOs. They have been on almost every IPO that I've covered so far. I've seen either JP Morgan or Goldman Sachs. And the thing is, a lot of these are backed. They need to be repaid for what they fund initially. And so that is a pretty good security, in my opinion. So all in all, really good. But we're going to go ahead and look at the shareholders. Obviously, we want to know who is holding what. And so right now, it's not a very concise list, and obviously we don't have all the numbers. So right now, we've got MWIG at 28%, 29%, roughly one of the largest holdings here. And, you know, we'll have to see how that affects things going forward. Apparently down here it says that Capital LLC owns approximately 65% of the membership interest in MWIG and is the sole manager of MWIG. Mr. Raymond, one of our directors, is the sole manager of FOD Capital, and as such may be deemed to beneficially own the shares of our common stock beneficially owned by MWIG. Mr. Wahlberg owns approximately 26% of the membership interest of MWIG. So Mark Wahlberg has a big stake in MWIG, which is interesting. So Mark Wahlberg's taking a pretty substantial piece of this pie. Now, obviously, he individually down here, we don't have his exact numbers, but if he's a substantial owner of MWIG, you know, that is going to be good for F45 as long as he is a consistent fan of theirs. So the next substantial share or so is going to be Michael Raymond, who's on the board of directors. And we'll be looking at them in just a second here. So he's a substantial owner. He's going to be dropping about 10% of his shares, though, once the IPO is. It says right here in the prior offering, he owned about almost 40%, substantially close to MWIG. They were about equal. And both of them dropped about 10% in ownership. The next one is Adam Gilchrist, who is CEO. He owns 32% as of right now, and he'll be dropping down to 25. Still substantial. And there's some things in this document with Adam Gilchrist that I do want to point out as I get towards the end of this video, which I think are interesting. But CEO holds about 25% of the stock itself, which is kind of interesting. That's a big holding there. He's going to obviously have a lot of voting rights. And directors, director nominees, executive officers, a big group there, holding also a large portion of this. So then to look at just these members of here, of the directors, at least as far as management's listed in this document, obviously we have Adam Gilchrist, founder, president, and CEO, chairman of the board. When we go down, we have Chris Payne, chief financial officer, chief revenue officer. And then we have Michael Raymond, who is a director. And, you know, as we pointed out before, Michael Raymond owns a substantial amount of the company for being just a director. I'm a little bit surprised by that. That's not a very, I don't want to say it's not very common, because that's not entirely true, but I do find it interesting that someone who is not a director holds such a large part of the company itself. And then obviously we go down, we got Mark Wahlberg, Darren Richmond, both directors as well. There's a lot of directors on this board and director nominees now. We didn't get to see all of the CEOs, or not CEOs, but officers listed as far as their stock holdings go. And obviously we'll get more details once the IPO itself happens. Obviously we'll see who holds what, because this is only to show what anticipated holdings are right now. Everything is subject to change as it goes forward. But it seems to me, I mean, the biggest players here are Adam Gilchrist, CEO, makes sense. Michael Raymond and Mark Wahlberg have a really substantial holding, and I find that kind of interesting. I don't know why they are such significant holders. Maybe they just really like F45, which is great, but I think it's kind of interesting that the majority of officers don't have as much holding as two directors do. But again, everything's subject to change as the company faces its IPO. And so those are the main things about the company and its cash flow overall. I will obviously link this in the description for you guys to go through if you want to look through it a little bit more yourself. But I do want to point out two things with this that I think are quite interesting. So, you know, if you're looking through this and you're thinking, okay, I do like what I see so far, or maybe you don't like what you see so far, there are two things that stood out to me that I think are very significant as far as choosing to invest in this. And the first thing I want to point out right here is their choice, not their choice, but their warning, shall we say, where it says, if you purchase shares of common stock in this offering, you will suffer immediate and substantial dilution of your investment. Okay, this is to be expected. When you invest, dilution happens because so many people are buying. It says the initial public offering price of our common stock is substantially higher than the net tangible book value per share of our common stock. Therefore, if you purchase shares of our common stock in this offering, you will pay a price per share that is substantially exceeding our net tangible book value per share after this offering. Based on this, assuming initial public offering price of $16 per share, the midpoint of the estimated price range set forth on the cover page of this prospectus, you will experience immediate dilution of $15.20 per share, representing the difference between our pro forma net tangible book value per share after giving effect to this offering and initial public offering price. See dilution for more detail. So, as I said before, dilution happens naturally. It's just when they're selling more shares, each share is going to dilute the next. But it's a little bit concerning for me personally that they're posting at such a high price, and then they're saying, by the way, each of these shares is going to go down about 80 cents each. And, you know, we don't know exactly what their price is. They listed it as a max. Maybe it'll be going down much lower. Maybe it'll be worth much less, in which that case, concern is very much mitigated or is far less significant. But it's quite a dilution, in my opinion, just to drop down about 80 cents. And here's the thing we got to remember. Robinhood is not allowing you to sell these shares if you purchase through them. You have to hold those for 30 days or you'll be banned from buying an IPO for 60 days. Or maybe it was 90 days, 60 or 90 days. So you're stuck with this. So if it dilutes more than you want it to, that's honestly too bad. And so it seems to me they're kind of hyperinflating a price that they don't have. But at the same time, dilution occurs naturally. It just seems like such a substantial amount, in my opinion. And the next thing I want to point out, which I think is also very significant, is their policy on dividends. It says here, since we have no current plans to pay regular cash dividends on our common stock following this offering, you may not receive any return on investment unless you sell your common stock for a price greater than that which you paid for it. We have never declared or paid cash dividends on our capital stock, and we do not anticipate paying any regular cash dividends on our common stock following this offering. So they're choosing not to pay dividends on their stock, which I like dividends. I don't know about you guys. I think that a good company pays dividends to the people who invest in them. That's how you get more investors. There's plenty of people in this world that live off dividends from their stock because of how much they invest in it. So that's a little concerning to me. Obviously it's not a major detour because not every stock pays dividends, but I'm not sure why they're opting to not pay out dividends. They're already down in money as is. You may as well make your investors happy. I'm just food for thought there. Obviously, things are subject to change, but seems a little bit odd in my opinion. But to each his own. I obviously don't know the business plan and what they plan to do in the future. Everything's subject to change. But the last thing that I do want to point out on here, which I found kind of interesting, and I want to hear your thoughts on this, what you guys think. So the company itself is somewhat indebted to itself. So they have loaned historically company subsidiary F45 Training had an informal and ongoing arrangement to extend non-interest bearing loans from time to time to Messrs. Gilchrist and Deutsch for various purposes as of December 31st, 2018, and as of March 15th, 2019, immediately prior to the consummation of MWIG transaction, there were 11,087,125 and 11,609,711 respectively in outstanding loans to Mr. Gilchrist, and 11,573,797 and 11,845,779 respectively in outstanding loans to Mr. Deutsch. So Deutsch is the founder of F45. Gilchrist is now the CEO. So Deutsch was the original, and then Gilchrist took over. So the company was indebted over $20 million to itself. And then to scroll up, there is the stock repurchase that on October 6, 2020, we entered into a common stock sale agreement with each of Mr. Deutsch and 2 million pursuant to which we repurchased from Mr. Deutsch and 2 million all of their respective outstanding shares of common stock for 142,953,754 and 63 cents and 31 million respectively. We also paid to Mr. Deutsch the 2.5 million transaction bonus payable to him. So Deutsch is out of the picture, more or less. They issued him stock, which he owns now, but they're still in debt to their CEO. And, obviously it's your company, you're going to be putting money into it. I get that. And they may have been starting off. They were kind of maybe hitting a rough patch there. Obviously 2019 and 2020, not a great year for anybody. That's just how it is. But this company is just, I'm seeing there's so much debt all around where there doesn't seem to be a good cash flow coming in. And the fact that they are maybe holding away from giving out dividends, it could be good. It could be that they're trying to reserve as much as possible, but it seems to me that there's just a lot of poor management as far as financing goes. And so that's just a bit of a concern to me, whether it be the continuous negative inflow for the past 3 years, or the fact that they owe money to their CEO and they only recently were able to cut out part of that debt, it just seems to me that there's a little bit of mismanagement, in my opinion. That does have a negative impact for me. I personally don't really think I will be investing in this. I just don't know what to expect. There could be the chance that they come in kind of lowballing and people are going to jump on it. Very possible. Which in that case, that's good. I want to see these companies succeed. I want to see them all do well. But there's a lot to be considered with that. But that's going to conclude this video. Let me know what you guys think in the comments below. I want to hear your thoughts. Are you going to be investing in F45? Are you going to be holding out for something else? And as always, make sure to like, share, comment, subscribe, hit the bell icon for future videos, and I will see you guys all in the next video.